Hi guys, Simon here. So a couple of people asked me for some trade reviews on things. So one is Euro Kiwi, one is Pound Aussie, a little information on Pound Dollar, and I'm going to show you a trade on the US Dow Jones, US30. So on Kiwi Dollar, I was looking for a long, to go long, a short-term trade on Monday morning, Friday night, Monday morning. I didn't take the trade, it just didn't conform to what I wanted to look for, but at the same time, I was interested to see if it's going to form anything. That's why I sat my hands. The idea was correct. We'll go through bit by bit. So a lot of people were short this pair, and I will be short overall this pair as well. So if you took a short and you've lost in the last couple of weeks just because, you know, it's not a bad trade, it's a good trade, just gone bad, that's all it is, no more than that. But the only reason I was looking for a long was a short-term intraday trade, no more than that. So let's break down properly. So the quarterly chart basically says you're at a key level, you're mixed around, pop back up, quarterly 50 EMA and the key level 1.7. I understand trees is at the top there, so yes, no, it is bearish. I do see it being bearish. Monthly chart, unfortunately, doesn't really show that. You actually see more of the inverse head and shoulder pattern at the bottom there, but you are making a lower high with a little pin bar at the top there. But you are testing the monthly 50 EMA, so going back up does kind of make a little bit of sense now. When you come down to the weekly chart, again, this is where the bearishness comes in. I do believe it is bearish, but just know if this is an inverse head and shoulder pattern here, if it is, there is a left shoulder up the top here at 1.735. And zoom out, you can see that little zone overall, this area here, I'll make it as a zone so everyone can see. This has been providing support and resistance for many, many years, for the last 8-9 years now. And so I understand why you're shorting here, and there's no reason why you shouldn't have had a short there, because you had a double top pattern forming there. RSI is at 100, bearish MACD divergence. I understand why the weekly is bearish, but this is why I like the daily. A short-term trade only going to go just before the key level. Just get out before the key level. I understood it being quite nice. So if you just zoom out a little bit, we can see over this area here we've got in the middle of the screen this whole year practically. The daily 50 MA has been key at proving the trend. So we're in a downtrend first of all. Then we're in an uptrend, come up, come down, come up, come down, higher, low there. I'm not saying this is trending upwards at the moment, obviously it is now, but what I was looking for really is just a little short-term trade just to the highs there. That's the only reason why. If you look at it here, you've got a double bottom on the RSI, you've got it with the trend, daily 50 EMA as well. It decelerated with a couple of reversal candles there. It's interesting for me to look at. When I come down to the 4-hour chart, there's no trend change. The 4-hour 50 MA is being respected, and we're making lower higher, lower low, lower high. I was expecting a pullback down to test this area here, and then it'll put a double bottom pattern in. As you can see here, put the level there. We've got a key level there in the past. The zoom out as well, you can see that area of resistance there. So just to move down would have been nice here. Then I would have got in at the bottom there, and I would have just done something like this. If it got a trade like that, stopped there, and I would have got out probably a 1-to-1, 1.3, something like that. That's what I was looking for, a short-term trade, nothing special. That was it, no more. I didn't anticipate this to go up like it has, and I wouldn't have traded that way, and I wouldn't have gambled that way either. So if you was short from here, this area here, and you've been stopped out, it's not a bad trade necessarily. You just need to wait a little bit more, maybe find another entry later on. But at the moment, though, the daily is trending higher highs, higher lows at the moment. So you may find 1.735, it could get back up to there. Don't be surprised. Okay, so the next pair is Pound Aussie. And one of the complaints, I say complaints, but one of the things people are struggling with is how to draw key levels on it. And to be quite honest, it's an absolute mess. It's difficult. So I'm going to show you the quarterly chart first of all. On the quarterly chart, I only have a couple of levels, key levels, no more in between. 2.09. 1.6 and it's downward sloping trend line. That's it. I know we got the quarterly 50 EMA, but it hasn't been respected, so don't really worry about that. If price comes up to this downward sloping trend line or 2.9 again, I would be interested in taking the trade, I would, but that's a super long-term position. Not really interested right now. If you look on the monthly chart, again, you can't really get too much into it. You can see the 1.6 level, though. If you zoom out, since the 70s, has been 1, 2, 3, and a bit there 4, 5. So definitely has been respected there. We made a triple bottom, and then we're moving up at the moment. We are grinding up. So we've not broke this downward sloping trend line. So it's only going to be a pullback on the monthly chart to this trend line. No more than that at the moment. When we come down to the weekly charts and daily charts, let's just have a look quickly. area. The weekly chart shows me a double top pattern, and this breakdown of the weekly trend here, just to the weekly 50 EMA. So I had an alert there actually to tag me in to make a double bottom on the daily chart of that one. I'll show that in a minute. But yeah, so I was just looking for a trade back up to test this upward sloping trend line, because if you notice on here, just forget the levels for now. You've got a higher high, higher low, higher high, higher low, higher high, higher low, double bottom, higher high, come back down for a triple bottom pattern, grind your way back up to a higher high, another higher low there, and then a double top pattern. So this is the first bearish signal we've got here so far. Then we broke down quite significantly, and we got this upward sloping trend line. I sold here and I've actually bought there, I have. So I've done both trades here on this pair, which has been quite nice. The levels on here, as you notice at the bottom, this box represents the 1.6 area on the monthly chart, and on the weekly chart you can see this quite nicely. I got a couple of levels around 1.66, 1.68. You can put a little box there. 1.71 is key. 1, 2, 3, 4, bit round there. I've got then another level 1.75. You got the trip bottom there, top, bottom. Almost a test there and a bit in the past. Then you've got another level here at 1.79 where you got 1, 2, 3, 4, 5 there, and then you've got this key level at the top here at 1.84, 1.843. That's what I've got there. So we could put another double top pattern there. I'm not really too bothered at the moment. I think we've broken down. Let's look at the daily chart. Why do I like the long position for a short-term trade? So my first trade was off this doji candle to go up, to get out before this level here. I think I showed it in the weekly review. Good little trade. I didn't want to take it that long up further, just purely because I didn't feel that I felt the bearishness could have come in quite strong. So I was just waiting for more of a confirmation on the lower time frames. However, you've got a double bottom pattern. You've got a key level at 1.812, 1.813 area. You can see it's quite key there. The move for me is only up to the daily 50 EMA. The reason why that is because if I think it's the downtrend, I don't think it's going to go any further. I do believe that we'll come up this area here and we test around here. We've got the Fibonacci 382, you've got daily 50 EMA, you've got this key area here, and you've got the upward sloping trend line. So I wouldn't want to trade through that. And like I said, this is the first double top pattern we actually had in this bullish run so far. So this breakdown would be nice. On the lower time frames now, I'll just show you the first trade I took was actually around this area here. It's only targeting the 4-hour 50 EMA. The first trade was purely because if you just zoom out, you can see how the 4-hour 50 EMA has been trending and respected time after time. The second trade I was waiting for a bullish confirmation, so pair to come back down, test the 4-hour 50, come back down, put in a double bottom pattern, and then I'd feel confident for it to be able to break that 4-hour 50 EMA. However, it didn't do that. Yesterday it started breaking up to the upside and it's broken up quite nicely. If you look at the 1-hour chart as well, you can see how the 1-hour chart has actually been respecting the 1-hour 50 EMA. So my actual entry on the first pair was around this area here, got out around about here somewhere. It's just chopped around, it's popped back up again, so it's definitely trending higher. So you probably find a little pull back around here and then you'll go back up again, but definitely we're in a bullish trend here now. We are all the way through up until at least the daily 50 EMA, which is around about 1.834. So now I'm just going to show you a little bit on pound dollar. I think pound dollar is an absolute mess at the moment. If you didn't get in when I got in, like down here somewhere, what's the point? There is no point whatsoever. The 1-hour chart has been chopping in and out of the 1-hour 50 EMA quite a bit now. The 4-hour chart doesn't give me much confidence either. It has this 4-hour bullish wedge. It's broke up, come down, come up, made a lower low pretty much, and it hasn't really closed below it, but still a lower low. It's now popping back up, so God knows what's going to happen next. But to be quite honest, it's getting a bit iffy now, so I don't really think it's a great trade to take. And like I said, when you come down to the 1-hour chart, just delete my entry here, it's just an absolute mess. There's no actual trend. You've got higher highs, higher lows as well, higher highs and low lows one after each other. So leave this out, don't bother doing it. There are far better pairs out there to trade. So the trade I'm in now, I've just entered, is the Dow Jones US30. It looks like I'm in a bit of negative money at the moment, but it doesn't matter too much because this is what I'm thinking. This is the daily chart. Now, I am bearish this pair. Now, this is a key level here at the top. obviously you ain't got these ones here, so you got a little kiss there, little kiss there, a little kiss there, and I think this is going to be another kiss here as well. So obviously we got this high test forming as it is now. I've entered already, which is quite a dangerous trade to take, you could say. However, I'm already 1% up on this pair, and I've taken profit already of that actual thing. So effectively, this is a risk-free trade. Yes, that is a 36-to-1 trade at the moment. That is, which I've entered. I'm still targeting my overall target of 22.5. The reason why 22.5 has come up is because of the monthly 50 EMA, which let me show you is here on this chart. So if you look how it's been respected, the 50 EMA all the way up since 2011, 1, 2, 3, little kiss there. So if I put 22,500, which is there, you can see I'm below the 50 EMA. I'm also around this area where it's been respected already. So that's the reason why my target's there. Why have I entered so early? Well, like I said, one, it's a risk-free trade for me. I won't lose nothing on this trade because I've already entered and banked money on this trade already, so I couldn't give a damn. Where's the US30? There we are. And you can see now we've got this triple top pattern forming on the 1 hour chart here. I'll pop that line in there for you. So you can see here we've got a triple top pattern. I'm just going to enlarge the MACD divergence. You can see here already we've got bullish MACD divergence here all the way through. So if I just zoom out and show you again, you see the bullish MACD divergence, and you can see that's quite strong. From this onwards here, it's bearish, so bearish MACD divergence with a bullish chart. Triple top pattern's good at a key daily level, so I quite like that. I've gone in for the gamble, and we will see what happens there really. At the moment, the 4 hour chart itself is just slowing down a little bit, so I'm happy with that trade. I'll leave it open. This is just the first part I was looking at, but that's not the actual trade. The actual trade would be what I put on the 1 hour chart, which is the 36-to-1. Okay guys, that's what I'm looking for, and we'll speak to you soon. Take care.